Hey traders, this is Ron. Happy Tuesday. Hope you guys are having a great holiday season already. As always, everything in this presentation is for educational purposes only. We'll start here with the daily chart of the S&P 500 ETF, the SPY. This is using TradeStation. Lower left was December a year ago. Upper right, of course, is where we are now. We closed just barely up on the day after hours. We're down a couple pennies here according to TradeStation, but we're basically sitting there at fresh all-time highs or right at them. If we take a look at the Qs, QQQ, same thing. And I had a question on the Dow because there were two back-to-back, actually you could argue 4 straight days where prices finished off their highs. So this is the diamonds, the Dow ETF. Here was 4 trading days ago, we came off the highs. Then we went all the way up there the next day. Friday came off the highs. Monday came off the highs. Today off the highs. I understand there could be some concern on a daily chart because you keep coming off these highs, but what's the direction? We're still pushing higher. Therefore, the bulls get the edge. So yes, I get it that we're coming off the highs each day, so they're not feeling as confident as maybe they were back a month ago where they were pushing it to the highs every single day, but the direction is still up, and that's the overall tiebreaker, if you will. Again, the first sign that there could be trouble is the 20-day EMA in red. We close below that. I'm going to come on and do a video and say, hey, there's time for some caution. We're getting a bit of a pullback. We get below the orange line, the bears are going to flat out get the edge in the daily chart. And just like I did in the video a couple days ago where I compared dailies and weeklies, that's what we're going to do. That's going to be the game plan. You already know what's going to happen. So as of right now, bulls get the edge. How about the Russell 2000? This one closed at the highs of the day. See, if we look at the IWM, pulled off the highs, pulls off the highs, pulls off the highs. There was even a down day, but you know what? Fresh new highs, but not all-time highs. I have to go back. Remember, August, September, right in there, those were the all-time highs, up around 173. And right now, that 170, 173, that is the target. So that's still potentially 8 to 10 points higher on ballpark on IWM. Some retail stocks, here's Big Lots, BIG. Big Lots had a big pop here. They're pushing higher. Today they closed the new near-term highs, took out the previous high. If you're watching Big Lots, 30 bucks is the target, and then it's all the way back up to that little gap fill north of 36. So still considerable upside technically for BIG. Here is Children's Place. I had a question on this one. I think there was also a question a couple days ago. With the big move down, and now you're getting these back-to-back big candle moves, you basically form a box. And the top side of that box, you could use the open from 12.11. That open was around 59.31. So if I zoom in here, what you literally could do, and I'll just do a trend line here. So let's do drawing, do a trend line. If I go here, perfect. And then I'll put one right down here, drawing, trend line, you get the idea right there. I need to break out of that range, take the high and the low. We broke out of it today. We closed near the highs of the day. It was above average volume. I don't need the volume to be as big as these other days. The fact that it's above average is a positive. The target now, without moving averages, is a gap fill up towards 70. That could be 7, 8, 9 bucks higher, right? But with the 20-day EMA, it's just such a good ebb and flow moving average. If it takes a couple days to get a little higher, this thing is going to come down and meet it. So I would say short term, 20 days the target. We get above there, then it's gap fill time. It's unlikely the stock is going to go from here and try to fill that gap in a day. There's usually going to be some back and forth, or maybe another day or two of popping, then a pause, and then it tries to get up there. But for me, if I was going to try to play this, right now the upside target would go 20-day EMA. We get above that, then I would go here. Now, how about, here's a potential turnaround candidate in Whiting Petroleum, ticker symbol WLL. I highlighted a bunch of energy stocks, oil and gas stocks, a few months ago. Some started turnarounds, most didn't. They just couldn't sustain it. And in the past month, we're seeing some signs like Halliburton's been pushing higher, etc. Well, this stock was 30 bucks in April. It was down below 5 to start this month. Talk about a haircut. What I'm seeing now is finally some black bars that are getting above average. There's still some tall red bars. Red bars are down days, black bars are up days. But what is interesting here, there is one thing it really couldn't do 2 consecutive days, and that is close above the orange line, which is the institutional moving average. We closed above it one day right before it gapped down. Then in September, we hit it, smack back down. We did get above it here at the beginning of November for a day and then right back down. Well, we hit it back on, that's going to be Thursday of last week. Let's go ahead and zoom in. We hit it Thursday, arguably closed above it by a penny or two, closed lower, moved up, but today we got through it. This to me is a good sign. Now, if I wanted to play a turnaround story on Whiting Petroleum, again, in a paper trading account, I would use the red line as the trailing stop. It's not going to be perfect, but I need something. So either pick a percentage stop with practice, use something that you found wherever. I would just go with the red line at this stage. The immediate target would be these highs, maybe 80, 90 cents higher, but that's over 10%, 15%. That's not bad. I would just go back to that peak here in November. But we get above that, we start getting up towards $8. Then the target is up there at 11 and a quarter. That's huge. 30% maybe, almost 30% move. And then it could be a gap fill. So this one looks interesting. Cardinal Health is one that's rolling over. Today it was down almost 4%, above average volume, finished towards the lows of the day, not a good sign. If I was a bull, you are put on notice at this stage. With that break below the 50-day on above average volume, this bottom side of this bull flag, this was the flagpole right here, and this was the flag. We busted out of it, had a nice little run, almost 10%. Now that we've broken down, the bottom side of this flag, maybe around 49, would be the first target. Then we go back to the next swing low around 45, and then we come back down to 42. So I would just go swing low, swing low, swing low. This swing low happens to be horizontal and it's part of a bull flag, which makes it interesting, around 49 bucks. All right, how about Baidu? Keep an eye on this one. This is Chinese stock. We had a nice thrust here in November and then it died out. Came down, hit the red line, bounced, came down, broke the red line, but it held the previous low, and that is interesting. So right now, for whatever reason, about 113.5 was defended not once, but twice on dips. Don't know why, it just is. And now we're coming back up to this previous high. This forms basically a double top. A close above 125 here, which is only another $1.16, is interesting. There's this one candle here around 130, then their gap fill all the way up there towards 153 would be the target. This one could get really interesting. The red line, as you just saw a couple weeks ago, does not work as a great trailing stop. So what I would want to do, and I would just give you this as a practice assignment, is put in a 21-day, put in a 30-day, put in a 30-day SMA, 30-day EMA. Try different ones and see if the stock conforms. If it doesn't, then I would still stick with a 20-day. Because when the stocks start to run, the 20-day works more than it doesn't. This has just been a lot of chop, so it's above and below. Same thing over here, lots of chop, above and below. But when stocks start to trend, that's when the red line can really come in handy. Here is Yum, trading range. Now keep an eye on Yum. I know I did this a couple videos ago, but we're starting to roll over a little bit today. We're down about just over 1%. Once we break about 97.50, the next stop isn't until somewhere down here, low 90s, mid 80s, 10% lower. If the stock were to break out of this big range, it needs to get above, what is that? I'm going to say about 103.60 something, 103.70. We just need to clear this gap down. We want to get into that gap. Once that happens, then the gap fill up to 110's on target. And then TTM, which is Tata Motors, not a ton of volume, but today was 1.7 million shares. And you can see what's happening here. We got a thrust, slight pullback, very low volume. That's a really long flag, and now we're breaking out of it. The fact that it broke out today above previous highs, it finished at 1277. The next target for Tata, frankly, somewhere back up towards 17. That could be almost 40% or so higher. Not saying it's going to get there, but there's nothing to stop it. This was such like a waterfall decline. The last pause was right in here, and you're starting to eat right through that. So that's why I'm saying 16.5 up there towards 17. And the move here the last couple days, 2 of the days have been on above average volume. That's also a good sign. And one more thing, we are having a second chance holiday event for the top 10 stocks for the new year. It is tomorrow. I'm going to show you the top stocks to kick off 2020 with a bang. I'm going to show you a stock that is 7 for 7, hasn't lost in the last 7 years. I'm going to show you a stock that has a 100% track record. It's never lost during a period of time. You'd be surprised what these stocks are, what they do, what they make. And I'm going to show you some of my other favorites as well, and not based on opinion, but based on fact. Certain stocks begin to soar the moment the calendar flips to January 1. Some actually go down too, but the market typically starts to get bullish again in January. Between now and year end, sort of choppy historically. Right now, we're still doing really well in the market for the bulls, and that's fine. But once the calendar turns to January, this list of stocks is amazing. They're proven winners. No guessing. We know exactly who to look at. So register at the bottom of this video. We're now under 100 seats, probably getting close to that 60, 70 area as of this video. If you received this video by email, there should be a link in your email where you can register for this event as well. So again, tomorrow, Wednesday the 18th, noon Eastern. I look forward to seeing you there. And again, happy holidays. All the best.